May profits be upon you. I had a request for some gold, a gold breakdown, and what's my man's name? Frangelico. I think that's his name. And if I butchered your name, I apologize. But shout out to you. I got you covered on gold. Okay, let's take a look at gold. All right. The first thing is this is the weekly time frame, and I just want to show you that I'm bearish on this in this market. Why? Look at the high, and look what we've done since this impulse. All we did was correct, break market structure here. That's internal market structure. Then we break this. We break this. This is the low that is responsible for that high. All right. We break that low. We tap it, push up, and then down. All right. Lower high, lower low. That's it. All right. And once we broke this this strong support here, this is this just indicates that we have a lot of bearish momentum. All right. Look at these candles. All of them. Each one is a week. Weeks heading down. Weeks heading down. Okay. Not a whole lot to think about here. All right. And here we are at this very strong, historically strong support, right? I call it support. And because that's what it's been doing. All right. And every time price comes there, we get a bounce. So this is a level to watch, because once we break this thing, it's going to be like a trap door being opened. Boom. Okay, watch. Now, let's go to the daily. I want to show you. Take a closer look at the current price action. We have this low here. We have the lower high. That's not exactly a straight line. We have the lower high. We break the low. We come down here for the lower low. All right. You're with me so far. Price is correcting. Price is in correction right now. That's key. Why? Because if you use your Fibonacci at the high and the low, the swing high and swing low on the daily time frame, and this happens to coincide with the swing high and low of the weekly time frame, you'll see that we've gone past the 50% mark, the equilibrium of this trading range, top and bottom, right? We're heading to the 618. All right. We don't need to tap that 618, but being in this area and just so happens to be a zone of supply here, ooh, that gives us good reason to think price is going down. I said down. That's right. I'm looking for shorts. I'm looking for sells. That was some lightning and some thunder. I got some things going on. It's like a scary movie. I said price is going down. You hear thunders, and you'll see the lightning and whatnot. Like I just said something really dramatic in a scary movie. Anyway, so we're on the 4 hour. This is where we're going to make our money, right? We see this correction. I need you to piece this together. Look at this is the 4 hour time frame, right? We see this descending correction. We see the pull up. This is the high mark, right? This is the high mark. All right, here. And then we get this pullback here. This is a significant enough pullback for me to call that bottom there a break of market structure. But we actually go lower than that. Breaking here, price pulls up. We break that. This is where the money's made. Here we have a change of character. Here we have a break of a short-term high, but this is an internal break of structure, IBOS, internal break of structure, right? And I like seeing it. I love to see it. All right, we break these highs. This is now we're breaking. We're making a break of structure here, a high time frame break of structure here, and as we break those things, right? We have to know that things are we can look at things as bullish on the 4 hour. You understand? Once you break structure on the time frame that you're looking at, then the market has shifted from bearish momentum to bullish momentum, right? This is a correction now. This is the impulse. This is the correction. But on the 4 hour, we are in a higher high, higher low situation. Got it? So what did we do here? We made this high, we pulled back, we made a higher high. All right. But do we have a lot of momentum? No, the momentum's starting to leave. We see this impulse, and now we see this impulse. All right. That's a pullback, and then we see this. Yeah. This was as far as corrections go, this looked kind of impulsive, right? But we got corrective here. And what I'd like to see, because we hit supply here, we hit supply. I would not be surprised at all if price makes another push to the midpoint of this zone. Doesn't have to at all. Right around here is the 618, the 618 Fibonacci retracement on the daily, right? But that's not necessary. What I'd like to see, I want to see this. Hello. I want to see this zone, this demand zone break. I want to see this demand zone fail like so, with a break and a close of a candle body, break and close below that, below these lows, sweeping this liquidity down here, and then the demand zone that's left behind is probably going to be up around here somewhere. Probably going to be here. All right. That supply zone that is left behind, I want to wait for price to come back for a high probability trade to the downside. And what would that give us? A head and shoulders. That's what I'm looking for. That is what I'm looking for. Now, let me warn you something. Let me warn you about something. All right. If you want to take your short from up here, that'd be very, very aggressive, because you're taking a short right into demand. Price could easily go higher and take out your stop loss. I think that's, you can do that if you like, be aggressive if you want to. Now, for those that are thinking you're off your rocker, price is going to keep going higher. Gold is going up, buddy, and you're going to miss the boat. Well, what I would urge you to do is wait until you see the failure of supply. This supply is in the way. Why would you want to take longs into this? Because price could just turn around and round over. All right. This supply is in your way. Wait till price breaks this supply, violates it, and then comes back and retests that demand that broke the supply. And you can take a high probability trade to the upside. That's what I would tell you to do. That's what I recommend you to do. All right. I'm looking for price to come down, break this, come back, hit that demand, hit that supply zone, so I can take a high probability trade to the downside. And what would be my target? I'm going to look out for you. I'm going to give you a target. Target this low right here. Why? Because it's hitting a weekly and with a daily demand inside of it. All right. The daily demand is nested inside the weekly. This is going to be a strong zone, in my opinion. And so we'll see if price comes down to here. This is where I would want to see price come. Come on, man. I do this all day, every day. I don't understand what's wrong with me. 1694.64. That would be my target. I think this would be a very nice ride, for gold. All right. It could possibly stop here. If I'm taking this trade, I'm taking a TP at this zone here. I'm letting you know that, because there's a possibility that price could reverse from here. All right, because this is a decisional box, a decisional zone, demand zone, and this is the originating impulse. All right, the return to the impulse is here. So I'm looking for price to continue down as the U.S. dollar gains strength Wednesday when it comes out, when the news, this CPI data comes out. The CPI data is going to bring some strength to the markets. So I would strongly urge you to hold tight on looking for sells until Wednesday. Okay, because as Wednesday approaches, I believe price will probably do some sideways action, not move a whole lot, come near this top, or quite possibly come to the middle point, take this top with a big wick, respect this zone, and then come down here, do that, you know, taking out this this demand zone and the supply that's left behind. High probability trade to the downside. The downtown train. I'm trying to get on board. Okay. Okay. Are you with me? I don't know. Hey, listen, I would appreciate your opinion. I would appreciate your feedback. Let me know. Am I crazy? Should I be looking for buys and buys only? Or are you with me on taking these sells? Hey, I hope you enjoyed this video. Do me a favor, hit the like button for me real quick as we talk, as I'm waiting. Yes, thank you very much. Do subscribe and hit that bell icon so that you can catch all the updates that I'm going to send out during the week. All right, you want to get notified. And like I said, leave a comment, man. I want to hear from you. All right, I think this is going to be potentially a banger. All right, a banger, a challenge passer. You understand what I'm talking about? This makes sense to me. Okay. I will see you in the next video. Hey, the last video I just did, it was CAD yen. It was about a half an hour. I did some breaking down, and I kind of gave an argument on my side of the analysis, because I think it can go either way, but I think the people who are thinking that's going the other way are wrong. And I give you my argument for it. Okay. I want your opinion on that. Okay. Would you do that for me? All right. I really would appreciate some feedback on that. I'll see you in the next video. Check out the video I got on your screen right now. You'll love it.